don't. And our next don't is to actually also not to overdo something, but in this case it's not about over analyzing, it's over or under trading. And again, I think I will have to create a stock chart, some random stock chart to show you an example of what I mean. Let's say this is before market hours, this is the stock, and you've done your analysis. And let's say you have a couple of lines that you know about this trend line that's supposed to be coming in, stuff like that. You know some stuff, you've done your analysis. Let's say this is a no-go zone, some other technical analysis tools. This also comes into our first don't of over-analyzing, but this is even more important. Over or under trading means that you act too many times on your plan. So let's say our stock starts over here, and it starts going up and going down, and going up and going up and down and up and down. It does some weird stuff. You don't exactly understand what's going on, or whatever. Now, over trading would be trying to catch too many movements to achieve profit. So obviously, the ideal trades for this specific graph would be to buy here, sell here, buy here, sell here, buy here, sell here. Every time, timing exactly the turn of the chart. But what you need to understand is that while this may boost profits, for example, as opposed to buying here and selling here, it can also completely ruin your plan. For this to be done correctly and successfully, you need to be able to predict the future turns of the stock market, which sadly I cannot do, you cannot do, because nobody can do that. So stick to your plan and trade once or twice in a minute, not 100 or 200 times in a minute. And it always actually depends on your plan and how volatile the stock is. Sometimes you'll need to be making trades in seconds, and sometimes it'll take minutes for your plan to come true. For example, if you want to buy this stock when or sell this stock when it hits here, it could go like that and it'll happen in seconds, or it can go like that and it'll happen in minutes. But don't try to buy it here, sell it here, buy it here, sell it here, all the way up. Make specific buying and selling points, and don't try to act in between them because you feel the chart might be changing up or shaping up to be a little bit different. Because if your plan was correct, then you are just making a mistake and ruining whatever it is you have set up. So that is it for our second don't. Let's go over to our last and third do, as in a tip that I think you should follow about something that you should do while trading, and that is to plan. A big mistake that I was doing when I first started trading would be to analyze a stock, as we have talked about, in whatever strategies you want. You create some support lines, some, parallel lines, some flags, whatever. And then I would wait for the market to open. I would follow my first rule of waiting after I learned the hard way that I should. And then I would start trading for whatever looks right to me. Oh, stock comes down here, I'll buy. Oh, stock comes up here, I'll sell. And all those. The problem is that when you just start acting on what you see in real time, you start overreacting and over-jittering. For example, you see the stock and you want to time it perfectly, and you're like, oh, it's about to hit, I'm gonna wait, and then it goes up and you miss it. Or, for example, you buy here because you can't wait for it to get down to the buy point, and then it just starts falling. So, what you should do is, in fact, while you are analyzing, don't only make the guidelines for the trades, plan your trades. I will buy if the stock hits this exact number within this exact time. I will sell if the stock hits this exact position at this exact time. Write it down. Write down the actions you would like to take in specific situations of the chart and of the stock, and then act upon them. If things go right, you will make money if you analyze the market correctly. Now, this does not mean that you shouldn't take opportunities when you see them that you didn't plan for, but that should not be your strategy. Your strategy should be to analyze and plan your trades and then do them accordingly as if you're a robot. Has the stock hit here? Is it before it is time? Yes, these are my rules for this trade. Yes, I will buy. Not, maybe I should, maybe I shouldn't, because you get into things like fear of missing out and fear of losing money, perhaps, so you sell, and then you make mistakes because you act with your emotions and instead of acting with logic. So that is one of the most important things. I will add here, plan specifically, this rule is your trades. So very important. I highly recommend you do this if you're getting into trading. And that takes us to our last don't. And this is don't look back. And this one actually specifically connects to our third do, which we just talked about, because this will happen a lot when you plan. So let's give our situation that we just talked about. You plan to buy here, you plan to buy here and sell here. That's your plan, right? Things go right. You do your actions according to plan, and you sell, and you made money. You took the upgoing of the stock. Now, this was your plan. You executed it. You made money. Now this starts to happen. What do you start thinking to yourself? You start looking back. Hold on, I shouldn't have sold. Hold on, I made a mistake. I took 5% profit, I could have taken 50. And you start attacking yourself, and you start making bad decisions. So you start saying, okay, I don't want to miss any more of this uphill. I'm going to buy right now. And then it starts falling. And your plan was to sell if it ever hits below here. So you sell. And it starts going up. You start acting not according to your plan, and you're starting to look at the opportunities you have missed. But you have to understand that when you make your plan for the trading day, you do not know what is going to happen in the market. So of course you are going to miss chances. Of course you're not going to maximize profits ideally. Of course you're not going to take every upturn, and you're not going to short every downturn. Shorting, by the way, is betting against the stock and making money when it goes down. So while it is good to reflect on the day at the end of it and learn from your mistakes, or perhaps missed opportunities, which are not necessarily mistakes, just making less money than you could have, don't do it while trading. Don't look back. Look where the stock is now. Look at the future plans. Don't analyze it as it's going on. Analyze before the market, plan before the market, trade in the market. Do not plan, do not analyze, and do not look back. Do not think, look at the opportunity I missed by selling. I should buy. I should sell. Do not. That is wrong. That will bring you a lot of bad decisions, which are not constructed from your planning and logic and strategies. And I really hope that you enjoyed today's lesson. I hope you took something from it and got a lot of value, education, or perhaps even entertainment out of it. I've been Dan from Happy Trading, and I wish you happy trading. Goodbye.